All right, let's jump into things. 20th of June, 10:06, 10:05, 10:06 in the morning. All right, so quick look at just any sort of news and data that we had overnight. Not really a great deal. I suppose we could cover sort of what we sort of saw through the day. That's right. The employment change came out while I was doing the analysis yesterday, so we've seen that. Yeah, I mean, pretty much an expected kind of response. But as I always sort of say, with the Aussie data, it's really a backseat to what's happening with the US dollar. And the US dollar obviously sort of pushed up through the session for the most part. So just actually updating it very quickly here. And that's obviously sort of what pushed Aussie to break some pretty key levels. It subsequently, both of those have reversed a little bit now, but that's okay. I'll get to those charts in a moment. So we had Swiss Bank. They cut rates as expected. BOE cut rates as expected. Both of these things could be more a little bit in the favour because they do make up actually directly make up portions of DXY could impact those things a little bit as well. But again, I think the main sort of driver with everything is the war stuff at the moment. Even the tariffs seem to have taken a sort of bit of a backseat. Um, US holiday overnight, so it was relatively quiet. I mean, things grinded along, and then yeah, nothing really too much expected there. That's right, we got bank holiday. Excuse me, jeez, in New Zealand this morning. New Zealand today. Anyway, I think I need another coffee. Um, let's keep moving. So we had CPI in Japan, and this obviously sort of beat expectations here a little bit. Expected to go up just one tick, and it's moved up two. So again, that moves obviously a little bit higher sort of inflation. Gives sort of a little bit more sort of thought to the idea that, like, they have to, well, not they have to, but they will want to raise rates at some stage. Like, Japan's a little bit different because for so long they've had super low inflation. So for them, they've always been trying to sort of gear it up kind of thing. So, yeah, they're a little bit different in that regard to other sort of central banks and economies. In terms of stuff going on here, haven't actually seen any of the notes on their minutes for their policy. We got China coming out, expected to hold on both of those, the 1 and the 5 year. That's pretty much it for Asia. So this may impact uh, the yuan a little bit. We'll see how we go. It's failed to break out yet, so push back down. But yeah, we'll see how this one goes. Typically these aren't sort of things that are like going to be, oh my God, it's a big shocker mover of the market. It's just again a little piece of the puzzle you can plug in there, but I wouldn't hang my hat on that for full directions for the day. Um, moving on, we got retail sales in. We got Gem PPI for what it's worth. So producer price index, slightly better, but still negative. Um, and then retail sales coming from the UK looking to slow down there as well. Again, all these things are mainly just to get a sort of broad global picture of what these other people are doing. I don't trade anything GBP, so it's not really directly impacting anything I'm trading. You got UADA speaking later. That could impact the market a little bit because of course, yen and US dollar are both big sort of movers and can actually sort of permeate through the market a little bit more. And then to finish off the week, you haven't really got anything. We've got manufacturing numbers, and manufacturing numbers over in the US have been shocking. I think it was Empire State the other day. It was a big miss to the downside. And these numbers, again, similar in the direction that they're still negative, but slowing, moving in a positive direction, but still a negative number. This was the equivalent of what we were looking at for Empire State figures the other day, and then it came in like minus 16 or something. So very weak on that sort of front. So yeah, we'll sort of pay attention. But again, that's not really like a massive mover for the thing. It's just a piece of the puzzle that you plug in there. So a pretty quiet sort of end to the week there. All right, so jump onto the charts, and DXY will start off with, and this is respecting the chart beautifully. Look, this was the move that we were saying, and this is what I was saying yesterday, that this felt like this was the last sort of like, I'm not an Elliott wave person, but here's one, here's two, here's three, here's four, here's five. So I guess now that puts us in ABC. Is the like, maybe somebody can correct me, but A, B, C. Are we done now? Does that mean we can now move on and move up this way here? I don't know. Look, I'm not a Elliott wave sort of aficionado, so I wouldn't oops, I wouldn't sort of go particularly on that, but it does seem to line up. We do have a little bit of a gap down this morning. We are back testing the top side of this falling resistance. So these are the courses that I put in here, sort of saying that, hey, look, you know what? These are where we expect the sellers to come in. They've come in here. I put these two price target sort of poles, whatever you want to put in, just to sort of see how the two would line up. And as you can see, this smaller one here, pretty much right to the cent. The bigger one obviously moving up, and what I quoted endlessly was 99.2, which was the body fill over here. So look, it just missed here, but the point is it's the price action and the structure is what's important. Like missing by 2 or 3 points isn't sort of like oh my God, it hasn't worked at all. But what we're sort of seeing here is okay, it's moving back down here. There was a couple of headlines overnight, I think, about sort of the length of time that Iran can hold out. I think Iran said they've got enough missiles for 5 months. There was other ones where Israel was saying, hey, look, we could achieve our targets in a couple of weeks, our objectives in a couple of weeks, which I assume is the main things that now seems to be blowing up their nuclear thing, which is buried in a bunker, buried in the middle of a hill kind of thing, in the middle of, I don't know, Dora or something like this, I think it's called. But the problem with this thing is that it needs to be so super precise, like within, 10 feet, 10 meters. That, the idea that they're going to be able to sort of find that and hit it seems a bit. You know what I mean? I'm sure, sort of like, they've obviously got incredible intelligence and able to do these sort of things, but I don't know. Anyway, it just seems a bit sort of that Netanyahu dude. I mean, not to get into a sort of, sort of song and dance about these sort of things, but he just seems like a little sort of short man syndrome. Like everybody says, just calm down, man. He's like, no, I've got to do it. I've got to do this for the will of the people or some garbage like this. So, whatever. Look, we're here for the charts and the price action. And this is what we're sort of doing. So I've just updated this little Fibonacci so we could look through. If this is your 5 moves, this is your high. This brings us back down now. Top side of this falling resistance, 38% in line with this little horizontal that you could see they were trying to hold, again, within a pip or two here. So look, I could see this as being a little rally area. I wouldn't be sort of thinking this is going to necessarily break all the way down here. There was a couple of headlines as well of Trump sort of saying, hey, look, we still want to have conversations and all this kind of stuff with it all. I think Trump sort of like, I'm a fan of Trump, but I think sometimes he overdoes it to the point of his own detriment. Like, he's forever, oh, I can fix this and I could do it in a day. And then these things come and he doesn't do it. And it's just like, after a while, it's the boy who cried wolf kind of thing. It's like, yeah, mate, sure you can, yeah. And you lose the pizzazz, you lose the power that people sort of have with these sort of things when you're like, oh, I could make a decision 1 second and, it'll all be done, it'll all be fixed. Well, I mean, look, as I said, I'm a Trump fan, but I think that's definitely a point of contention in the sense that, you know what I mean, you just can't. Like, these people are just, you're dealing with people that are insane, like, quite frankly, and shit. And, these people just want to blow each other up. Well, anyway, whatever. I get sidetracked with these things. What we're looking at here is a little bit of a gap down on open. This provides a little rally effort at some stage. So we will see some sort of rally effort. Either it'll try and close it straight away, or we'll see something more to this effect, and it'll sort of do this, and then maybe come up here later on, and this would sort of give us our right shoulder, similar, which actually in time would be a lot longer. Let's just do this. So this is the length. So the idea with the inverted head and shoulders is that pretty much the right shoulder or left shoulder will match the right shoulder in length of time. So if we say that's your neckline, that's what we could be looking at, which takes us through till next week. So that is a possibility in terms of sort of length of time. Should this level hold? Should this not just bounce straight back up? Should this start to sort of just really find itself like a little range basically through this period here, which would be similar basically. Actually, let's just do that. which would be similar pretty much to this. Should the market decide to do something like this, you could pretty much sort of go, okay, well, that's your range here. Actually, let's use that one there. That could be your potential sort of range that we start to find it play in. So this is just in a sort of technical sort of standpoint to sort of say that, look, if this is to be a true head and shoulders, and it does want to sort of hold here for a little bit longer, then we could be sort of pushing through till, as you say, through till Tuesday or so next week, just to time match this shoulder with this shoulder here. From a technical standpoint, that's how it works. Doesn't mean it's necessarily going to do it. It could follow this course that we planned out. As I said, that's why I put the two things out here, because I did think there was an idea that the sellers were going to come in here. You don't come back to this part here and then fly through straight away. It just doesn't work like that. You're going to see the sellers come in. The sellers have moved in. People take profits, whichever, whatever, however you want to draw it up. They have the prices move back down over here. The question now is, does it A, sort of make this right shoulder through here, B, come down here, or C, come up the top over here? And I know that's it's kind of like, does it go up, does it go down, or does it stay flat? Wow, geez, such insight. But the point is that you don't know. Like, anybody that's going to tell you that they know, just they're bullshitting to themselves and bullshitting to you. What we can expect is probably an effort to close the gap. People will get sucked in, and then they'll sort of dribble it down, dribble down. This is what we've seen through Asia a lot recently. It's just been this dribble, 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 nothings kind of things through the sessions. So, what I mean, as I do think it is coming up here, I still have 99.4 as the breakout line, but I'm prepared to understand that this may take a little while longer to develop, unless we have some sort of breaking headlines that sort of go, yep, okay, bang, and which we will move up here faster. So I still am looking for the top side here. I think the break of the falling resistance is credible, and I think that needs to be respected. But with all breakouts, there's the three parts. There's the breakout, the back test, and then the subsequent higher high. Now, higher high obviously takes you above this point here, but just because we've got all these other sort of little wicks and actual sort of areas up over here, I'm putting the actual confirmation at 99.4, because there's a good chance that we see these kind of moves here with the wicks come up and then it comes back down into here. So I think, look, I am still sort of in the camp of we will see higher, but understanding in the fact that it may take a little while longer. So yeah, we go. All right, Aussie. So Aussie came back down, found buyers exactly where we marked out yesterday. Like, you know what I mean? This is the whole sort of point of doing these analysis. We'll go, okay, if I was a buyer, where would I be? And this is why we put these buys here into this support here. Why? Because this is where we've seen buyers previously. Now, because it was such a grind up like this, and now we're seeing just a grind down like this, it's going to provide a lot of these sort of bounce points. This is another sort of area, like I've sort of covered this a couple of times. So this is kind of, if you were to call this a channel, right, it's a bit of an odd channel here, because channels strictly generally have, the high and the low that it's working with. This is sort of, because it's so scrappy, it's kind of got what I've sort of called bands on here. And the bands are basically in the top side here, it sells down. There's no definitive, like, nice pattern, like, between these highs. There's no like that. You can kind of fit these ones here on the lower part of the band that are kind of respected. So anytime it's in this top section, sold down. Anytime in this bottom section, it buys up. I covered this the other day. And again, we've seen it. Came down into this area. We've got the horizontal, where we thought the buyers would be. It's into this lower band, which we've seen the market buy it up constantly. And they've done it again. Doesn't mean that, that's it and it's going back up over here. But it does justify the idea of why we're seeing this bounce. Now, the chart that I've been working off is this this wedge, which I think is a little bit more sort of, something realistic with it all. So, get this one out of here. That was just for entertainment purposes. There's your break line. Boom. So what we're kind of seeing here is obviously a little bit of a wedge that it had been respecting. Let's get rid of some of these just to clear it up. sort of overemphasize the point, I think, a little bit here. We saw the buyers here, push down, push back up. This, although it's sort of like as a little bit of a kind of could be seen as a little bit of a fake out and then push back up over here, I think is important because I think this, as we see, as I said a second ago, there's three parts to a breakout. Doesn't matter whether you're moving up or moving down, moving through diagonals, anything. You got your breakout, or breakdown in this case, your back test, and that means that this line now is the lower low. Lower low confirms the breakdown. So this back test, although it's not sort of anything like sort of perfect as in, you'd want it to sort of reject from where you've got your support. You should have rejected from here. See how you got this little wick came up here and then bang down? That's one there. So the fact that it's come up a little bit higher, given the way the price action has been a lot recently, and I've been seeing this like because I've obviously watched gold very closely. Gold has broken down like this a number of times just to sort of get onto this. Look at this on a lower time frame here. Where are we at? Trying to find a good example, but I think that's sort of this kind of stuff here even. Like if you say that's your kind of support through here because all the bodies are filling up there, breaks down, should be coming up for a back test. Oh, it goes even higher. Breaks down, should be coming up, takes out this high, up to this high, breaks down. So it doesn't mean that obviously like it's still moving down, but whereas your technical sort of setup for these things should be, well, here's our support, where you want to draw it. It should be breakdown, back test, onto the support, low past the lower low, and there's your breakdown. In a perfect textbook example of how a range, you can't see me doing the air quotations, range should break. That's how it should work. Actually, leave that on there. I'll get to gold in a bit. So the fact that we've sort of like broken this range and then sort of come up even higher doesn't, I'm not sort of like, oh, well, no, that's not, it doesn't count. I don't think that it's working like that at the moment. I think particularly where you see how choppy all this kind of crap is over here, you know what I mean? Look, here's your support, breaks down all the way back up. It's just, it's not, yeah. I'm trying to think of the right way to say it because, of course, I do these things on the fly. But the way that I'm seeing this is that your traditional sort of technical analysis is not working. You need to be able to adapt, and the adaptation is that you need to have a bigger allowance for these things to come back up like this. I don't think we're going to come back up over here. Maybe we can. I don't think it because of, as I said, with US dollar moving up or potentially moving up in my analysis, it looks like it's moving up. That's going to weigh on Aussie. Now, Aussie's kind of, the market's kind of disregarded the Middle East situation for the most part. It reacts on headlines, like as the headline comes up. I think I covered this the other day. I didn't update this one. I said I was going to, but where's the chart? This one here. So you can see it does react on the headlines. This was another headline over here. So let me just, I'll fill these ones out here. Whoops. These are the ones that I'll update in a bit. But you could see points here: initial attacks, de-escalation. They're going to come involved. I'll fill these out later. But you can see the market reacts to that actual headline. But in actual sense, it's not really holding things because, you know what I mean? Or maybe it's just taking a long time to get there. I don't know. Let me get back onto the Aussie. Sorry, it's a bit all over the place this morning. Where's that other Aussie chart? Here we go. So, the whole sort of thing is Aussie's a risk asset. It's been showing no signs of true de-escalation. There's the headlines, and it reacts to it. As we can see, this little move here. But all in all, they're still lobbing bombs and that, and still saying, like, coming out with sort of things like, oh, we're going to blow you up, and if America gets involved, we're going to attack them, and if Israel thinks that they could do it in a couple of weeks, like, you know what I mean? It's still very prevalent that this thing is going on and doesn't really look like it's slowing down. So this being a risk asset, Aussie should be, down over here at least 63. In previous times, previous wars, it got absolutely clobbered to the tune of a couple of hundred points. This, not only is it sort of kind of for the most part just ignored it and held up near the highs, every time it gets sold down, they're buying it back up. So, you know what I mean? It's you can't sort of apply typical normal price action or fundamental understanding to these situations at the moment, in my opinion. I think I think it will prevail. I think Aussie will come down over here, but you got to give it that extra leeway and sort of just because this has bounced back up here a bit doesn't mean necessarily that it's coming up here. The way that I'm playing Aussie is the idea that buy the dip has worked so well, so many times here. I think this is what is going to feed a move to come down here, because I think people are going to go, well, buy the dips worked every other time. Why won't it work this time? And I think because of that, there's a good chance that sort of that'll feed a couple of people. They'll buy the lows, they'll run it down, take them out. You're going to get another lot of buyers here. Go back to that other chart. You're going to get another lot of buyers down here. So you break that low that we just said before, which is where I put that alert underneath that one here. That'll move down. Where's it going to take us to? It's going to take us to 64.10. We're going to see buyers here. We've seen buyers here previously, just like we saw buyers here. We saw buyers here. We're going to see another reaction from the market here. We're going to go through the same pattern again. They're going to come down. They're going to break this low here in this scenario. Probably come back up here, so it's completely moot point. But in this scenario, breaks the lows. Where does it go? It goes to where we've seen the previous buys, down to this low here. What happens then? People go, boom, all right, here, let's go. Buy the dip works. Yeah, Aussie, it's going back up like this. Moves back up. They use that to feed this, and they'll break that, and they'll come down here. And this will be the course. And I think because it was such a grind on the way up here, I think we're going to see that kind of move, very studded, like rally efforts, all the way down, coming down here. So I think I think it's gonna get there, but I think it's going to be a slow chug grind along to do it. But as I keep saying, US dollar is such a massive ship to turn around. We've seen this previously. These charts are getting scrappy. Maybe I've put on these kind of periods here. This thing takes a long time to turn around. 39 days, 28 days, 26 days. I think this is from high to low, took another 39 there. You know what I mean? Like it doesn't turn around on a dime most of the time. I mean, yes, here it did, but I suppose you could say that this is the whole sort of actual turnaround period here. Point being is that this has taken how long here? Depending where you want to call the lows, call from here, just to get a rough idea. 45 days. So a little bit longer than this over here, 39 days to turn this one around, 45 days to turn this around, 28 days to turn this around. But look at the moves that have come after it. I'm not saying necessarily we're coming back up over here. That's fine. We can go through the analysis. We can go through the double bottom, and this gives us the 106 price target. These are possible things, but we'll get to that when we get to that. The point is that, because it takes so long to turn around, most likely it's going to put in a pretty decent bounce. Because if you look at these ones here, so this one took 26 days to turn around. The pullback came to 78%. This one here took 28 days to turn around. The pullback, 161%. Look at the highs over here. This one here, I remember this. I actually played this one beautifully. But the turnaround here from the highs to like kind of thing, 35, 36 days. If you look at the move here, 61 to 78%. I suppose you could actually probably drag this from down the bottom over here. But where did it get to? Oh my, this pretty much 61% of this big move here it came back to. So the point is that sort of like these things, it takes forever to turn it around. But when it does turn around, it doesn't generally sort of just go up, 20 pips and then fall over again. Now, you can't, past performance isn't a true relier of future conditions or whatever that saying is. Look, that's a possibility. Look, not every time's exactly the same. But the thing is, if we do actually get up off the floor, because at the moment it's still in this quite a bearish sort of thing, but should we get up above, 99.4, say you get back up to around 100, 101, it puts it in pretty good stead to sort of actually continue to move up. And if we look at sort of where this actual move has come down from, up over here, move down here. So 61% takes you back up here. 78%, obviously, all the way back up over here. So these things have happened previously multiple times that you've had these incredible moves in one direction, takes forever to turn around, and then the subsequent move coming up the other side is deep, like 61, 78%. I don't think you're going to 161. That'd destroy everything in the market. Aussie would be 50 cents. But yeah, anyway, no, look, I don't think that's going to happen. I think that's an extreme scenario. But the point is that these things have happened in the past, and that's what you need to be aware of. That once this starts moving, there's going to be a lot of people that are going to sort of be like, oh, yep, here's enough, and go down. And this is where the fanboy analogy comes in, because it looks like it's going to fall over and it'll go up higher. It'll look like it's going to go down and it goes up higher. And each time, everybody that's like beating their chest and saying, yep, US dollar's stuffed, they'll be trying to short it. That's just going to feed the next leg. Oh, we're going to short it from here. That'll feed the next leg. And this thing will continue. That's what I've seen in the past. It's not always the same. I mean, obviously, they've got a bit of a crisis sort of thing going on with confidence in the US at the moment. But that's a larger sort of picture and idea. And if that happens, you just have to think how you're going to trade that. If you're trading euro, you could probably trade. I mean, these things it has the potential to come back to parity, or very close to, in my opinion. Aussie, I think, could be destined to sort of 60 cents again. I mean, that's a lot smaller drop, 60 Aussie to 60 cents than it is euro to parity. But these are things that could potentially happen should this thing start to continue and rip like it has in the past. We'll see how we go though. Anyway, that's the big picture. The short term Aussie, if we take out the lows, then we're looking down to 64.10. Bit of a dribble on for that kind of stuff. All right, move along. We got gold. Gold is still grinding. I said yesterday that I was looking for 60 for the breakdown line. And we got that, and it was a nice little break actually underneath. Came down, I think 47 was the low that we got. Yeah, 47. And this is the thing, again, that should be a breakdown. What's it do? Bounces right back up. And now it starts to dribble down. But you can see that these wicks are quite an important area. So I would say, again, under 60, I'm going to maintain 60 as that line. And I'm going to say that if that 60 comes down, then we're going to be targeting this level. And this is a fun thing about having multiple charts. You can look through and go, hey, hold on, wait, I had that level marked out. Excuse me. So it's a reoccurring level that we've seen, obviously, sort of here. So, we've got direction, no, pinpoint. So we can see that obviously this has been an area that the markets like to play with it. Once they got above it, below it, they tried to hold it, unable to do so. Back on the buyers and back on the sellers. So this is a pretty important level, as you can see here, for both sides of it all. Both, I guess people call it, people call these things different things, but I think they call this just a pivot point. So as you can see, it's very much a pivot point here, and if this takes out here, I think this is going to be the next line to sort of break down for it all. That 45, I think, if we actually go back onto my 50th chart, where's it going through 24? No, that wasn't the level here. So we did get pretty much this price action. So this is what we were kind of looking for yesterday. a break down here, a push back up. This is the leg we're in now. So there's three parts to these. You got the breakdown, which is this leg here, which is this little wick coming down here, bounces back up. This is the leg we're interested in now, seeing how deep this one will come. And I think the early indicator is, again, under 60. As you can see, sort of like, get these out of the way. If we get underneath 60, and particularly a close, this is on the 4 hour, so a 4 hour close where we are 8 o'clock, so 12 o'clock. So hour and a half. In the next hour and a half, you close underneath 60. I think your immediate target is just the wick fill at 45. Underneath 45, I think that's kind of opens the door, and we could probably be looking a little bit lower. Round number 3,300, possibly down to 3,280 through that. So, I mean, that's the downside idea of it. This RSI sort of built itself up, at least off super. It's still pretty oversold, but it's not quite there. So that's the bull case sort of scenario. Sorry, bear case sort of scenario. Bull case is if this holds, and if this holds again and again and again and again, then we could see it put in a rally effort, and then you'd be targeting the 90s again. I don't think this is the setup to go. This just doesn't look like something that's like, wow, yeah, here they go buying the dip, because they are still technically putting in lower lows and lower highs. It's just tightened up a lot through here. There was the US holiday yesterday, so you could see this is kind of the reaction of that kind of stuff, just super tight trading range. So between 60 and 78. So, you know, $15 range, $16 range for gold is, given everything recently, very tight. As you can see, it's really pinching up here. I did see a thing a while ago where the guy was talking about some price action of things, and these particular little sort of moves like this, he was talking about in regards to S&P, but he was sort of saying that sort of like they can particularly do this. And I know there's people that are going to go like, oh, yeah, tinfoil, yeah, what, you think somebody's moving the market? Yes, yes, I do think somebody is moving the market. I think you're an idiot if you don't think that. But regardless, look, these kind of moves like this can be very much pinching up because they don't want to scare people. You know what I mean? You get these big, long drops like this, people go, well, I'm not going to buy that. But when you see something set up like this, what do people do? They go, oh, like, and I saw people sort of saying this. They're like, oh, look, it's accumulating, accumulating, accumulating. Look at this, it's going to go back up here. And look, there was a possibility for that. And that's why we had the breakout confirmation line above 34.10. That would be, okay, yes, that's the scenario. It's coming like this. It's a rounded bottom. It's at the rising support. You know, that is. But what does it do? It feeds people to get long, 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 long. Bang, bang, take out some stops, take out some stops. What happens when you do it again down here? Or what happens when people go, it's a fake out, blah, 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 and they load up this level here as well? This is my point. That's sort of like, there's the two sides of it all. So it's not just because I think it's going down doesn't mean it will. I mean, it could very much sort of come back up over here. I mean, there is reason for it too. It's just I work mainly off the technicals, and the technicals to me are these kind of levels here to say we're going lower. So underneath that low for me is going to be a confirmation. So we say if US dollar continues to go sideways, gold I imagine will go sideways. But the point is this will just replicate this area here. You'll build up a bunch of stops underneath this zone, maybe underneath the wick, and people will say, hey, look, this is just absorbing, absorbing, absorbing to move back up over here. If they do break it down, well, that's going to trigger the stops, which is going to feed the move to come back down towards 3,300. So that's the way that this will sort of play out, in my opinion. But I think going back to the initial sort of point with that, I think that sort of these moves here, where they trickle it a little bit, is kind of just sort of they don't want to scare people off because you can build up more liquidity, build up more people going, yep, look how long it's holding, it's holding, it's holding, it's holding. More people get on board, get on board, get on board. Well, that's more people to sell into and more stops to sort of hit as it sort of starts to move down. So we'll see how we go. Look, both sides, obviously, some sort of potential, but I would say I'm still looking back down over here. I think the fact that you're breaking through this actual sort of rising support, I did see somebody actually mark out this, which almost gives it a bit of a channel. So I guess that's something that we could be sort of playing off as well, because you got one, two, three touches on this now. It does match up pretty well with this top side here. So again, look, it could be the channel. Maybe the channel's what's playing out. We'll see how it goes. But as I said, I'm leaning more probably on the downside for this move here. As I said, I think a US dollar will be moving up. It just hasn't been responding as it should. You know what I mean? Wars breaking out, yada yada, and all it can do is just hold sideways. I don't know. Particularly if there's a de-escalation. We saw the de-escalation the other night and it dropped $20 in like 2 minutes. So, well, de-escalation again, air quotes. So, yeah, that's my sort of look with gold. I think if you get above sort of 80, then yeah, look, you're going to go up and you're going to test these 96 levels. That puts it in the idea that you may get a bit of a rally, and it could be this channel. But as I said, I think sort of certainly the downside is what I'm looking for, and the downside is predicated on this move coming down underneath 45. All right, move along. We got silver. So silver's back into its little zone over here. I'm still playing the idea that we see a little bit of a pullback around sort of 35. I think the same sort of thing. A nice little line set up here. It did have a little bit of a test down here before it went higher. I think underneath sort of 35.80 will open the door to a test of this rising support. Depending as of what pace it comes into that, that'll sort of determine sort of obviously when it comes in contact with it. But I think the sort of indicator is underneath 35.80. And yeah, I want to see what happens when it comes in contact with this rising support over here. That's where I'm interested. Copper, we got the test overnight. It seems to have held for the moment. This is what we're still looking for. Well, I'm looking for. This move up over here was just a little bit of a fluff up kind of thing. It hasn't really sort of shown anything. More or less, it's just like consolidating. So this would be your swing low in this kind of like scenario. Um, so I think underneath here, you could put a little box around this area here. I think that would probably be something. I think that would probably give you a direction. Breakout box. And the reason that I put this on this, even though this would technically take it outside this thing, is that trying to see if I've got an example still on the charts. I think I've updated these ones. Might have been this one here. No. Yeah, look, I can't find an example now. But the point is knowing what you're trading. That's what I'm trying to sort of say. And with that, copper does like to have these channels and do little fake outs and then keep moving up higher. So I would give it a little bit of leeway down to this support over here at 478. I think a close underneath that. You're looking down at 468, which is still a little bit of a move. I mean, that's still 2% down. Should you break that box? And then I want to see what happens at this section down here. This is where I'm interested to see if, again, look, I mean, maybe these things could come in the same time as silver tries to put in a rally if it breaks back down towards that 3,500 target. Comes back down to 3,500, copper comes down to 4.68. Maybe they both see buyers and sentiment pick up and they both try to rally off that point there. We'll see how we go. I still think probably downside is to come with these things. And finally with China. So China again, swing and a miss. I mean, this is what the yuan always does. It sort of looks like it's going, and boom, fails. It's a very controlled currency by the PBOC. That's why you don't get a lot of movement. You'll get a lot of sideways grind, and then when it does move, it'll do this like it'll move quite quickly from level to level. And now you're playing in this area over here. But as we can see, try to move up here. 720 is the line. That's obviously where we can see sellers are here, still in the box over here. So look, you could come back to mid-range point through here, certainly while US is sort of stuffing around with that little bit of a back test area. You see some US dollar weakness across the board with this kind of stuff. I do think this is the plan still. It's just a little bit more on the waiting side of things. So yeah, not happening today. Cool. And finally, it's again gold silver ratio. See how that's playing out. It's trying to hold this little zone down the bottom over here. See how far this goes. It's gone back up to overbought pretty quickly. So as you can see, it was down over here. Overbought was kind of, I suppose, came in overbought at this point here. Sort of hung in overbought for this whole move up over here. But we're back up into it already, and we're about this point here. Look, I'm not really so crazy about this chart at the moment. We've got this sort of support along here. Seems to be holding for now. I think it'll be interesting to see where this bounce comes to. If this bounce comes back up here, then I think we look for a range. If it sort of if it fizzles out early and comes back here, I think that goes down here. But as I said, that downside move is still somewhat limited. So I think this is pretty much still what you'd be looking for a downside move. So I'm not really in either camp with this at the moment. Gold's obviously pretty weak, so even sort of moving these things up doesn't really do much. Possibly a push up here will sort of weaken silver, and we sort of see it move towards that 35 target. But yeah, I'm not sort of super crazy about this chart at the moment. All right, that's it from me.